back with another video for y'all. Today I'm gonna be going over my strategy. I ain't gonna lie, a lot of y'all been like asking me like what strategy you use, and I be telling y'all that I feel like it's time to do a video so y'all could see what it really is. Cause I ain't gonna lie, it's a lot of people that be explaining my strategy wrong, so I'm just here to clarify it and show y'all what it is. So what I trade is the inversion fair value gap. This is what I trade. This is my model, inversion fair value gap. And for short, I'm gonna just call it IFVG. So basically what this is you'll have a fair value gap. For those of you who don't know what a fair value gap is, I have that video on my YouTube channel explaining what a BISC and CB is. So go check that video out, then come back to this one. So you'll know what I'm talking about. But for the ones who do know what a fair value gap is, it's basically when we close it. So right here, when we close above it, most fair value gaps, like you'll tap from it. So here go one right here. Let me get my brush for y'all. So you see like how right here, this swing high is it tapped from this fair value gap. That's usually what fair value gaps do. But with my model, I'm like basically going against it. So you see how it never closed above it, this fair value gap. So this is what most fair value gaps are used for, just bounce off it, come inside of it, tap it, bounce off, go back down. But what I'm going to do is I'm going to wait for us to close above it like we did here in this one. So this fair value gap, we closed above it, and we closed right here on this green candle. On this green candle, we closed above this fair value gap right here. Where that line is, where I got this vertical line, that's where we closed above it. So I'm going to enter there, and I want to show you all where you all put your stop loss at. The stop loss is a close back below the fair value gap. So a close back below. So initially about like right here is good, about a 30-point stop loss, and I would target this high. So that's for the buy side. I'm gonna show you all an example of sell side, and it's actually on this chart. I want you all to see, like, pause the video and see if you all could see where you was short with the inversion fair value gap. So and another thing too is more to it. So we swept sell side. So that was just showing you all the model that we swept like all this sell side down here. We took all of this, we took that low, and not only that, we took this low again. So we got a manipulation leg with it. So as y'all can see, we took sell side, and this is going to be very, 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 very important. Make sure y'all pay attention to when I say this. You want to be delivering from a fair value gap to the left. Oops, I'm sorry. Yeah, so you all want to be delivering from a fair value gap to the left. As y'all can see, this fair value gap right here, this gray box is a fair value gap. So usually when you see price do this, and notice we never close below this fair value gap. We never close below it. So that's usually an indication that price wants to go higher, or whatever direction it wants to go, depending on if you're shorting or buying. But in this instance, is indicating that we want to go long here because we held this fair value gap. We never broke it. We never closed below it. If the bodies would have did this, let me change the color. Hold on. Let me change this. So alright, let's say this yellow box would have closed below this gray box, the fair value gap. If it would have did that, then that indicates that price wants to go lower to the next liquidity pool. But since it held, and immediately after holding, we get a good reaction, but it took 1, 2, 3 candles to inverse. Usually that lets me know, like, yeah, we are at least can hit this high for buy side. And not only that, but another reason why this is a good trade, and then my model is break-even points. There's a good break-even right here. So as soon as we hit this high, you can go to break-even. And you also don't know if we're going to break this fair value gap right here. You don't know if we're going to break this fair value gap. So it's best to go break-even. So you have a good break-even point, and you also have a good target. And as you can see, we just blasted through it. And yeah, you could have scaled here, left a runner, however you wanted to play it. But point is, you want to be in. So this is, you want to be in discount. This is for loans, by the way, discount / premium. But in this instant, you want to be in discount because we're looking for loans. You want good volume above the fair value gap. You want to be delivering from a fair value gap to the left. And then you want to sweep sell side. So you want to take liquidity sell side, because no good loan is going to genuinely work if there's still sell side beneath. You want to just be patient, wait till that sell side is ran, and then execute the trade. And sometimes you'll have an order block, but that's not really like a need for it. This is like the main thing for it. You want to be in discount. You want to have good volume above the fair value gap. As you all can see, it took 3 candles. And generally, you want it to be 6 candles or less. So as you can see, this took 3 candles. 1, 2, 3. And then on this third candle, we closed above the fair value gap. So good volume, fair value gap to the left. As you all can see, this gray box is a fair value gap. And then we swap sell side to the left. And then, oh, I forgot. You do want to have a good target. You want to have a good target. You don't want to. So like, let's say if all of this did happen, you don't want to target a high that already took out multiple highs without sweeping sell side. So that's why I say wait for sell side to be swept so you can target that high. And let's say even if that high, like how this swing on point right here, this line, how this high took out this liquidity right here, these like kind of equal highs right here. Boom. Hold on, let me put this up. So how this swing high took this high, you want to wait for sell side to not get took. So now you can retarget this high, because this high won't, like right now, if you were to, like, let's say if a loan setup was to happen like kind of up here, like where my mouser is, it wouldn't work more than likely, because you're going for liquidity that already took out liquidity. So that's why I say you want to wait for sell side to get swept. As you can see, we had these candles down, took out all this sell side down here, and there's more sell side to the left. We took out that sell side, delivered from a fair value gap, and then instant reaction up. So that let me know, okay, we can run this buy side again, or at least to this swing high. And yeah, so that's that for longs. I'm gonna go over a short right quick. And I'll and comment down below if y'all seen the short before I even said it. So same thing, same concept. It's just now that we're going short. So as you can see, let me zoom out to the left. this high, hold on, let me go on the 2-minute chart for y'all. This high took out this, so we just swept by side, right? So, and all you all can do, you gotta wait for the reaction. Like that's all you can do, cause I don't know if we take this high. I don't know if we're gonna continue up. So that's why you want to be patient and not read or predict it. I mean, not predict the market, but just go along with it. Just react. So I see, like, okay, once we take this high, we start having a reaction to it, a bearish reaction. So we come down, tap inside this fair value gap right here. Tap into this fair value gap. Now this is where my model comes in. So then we retrace, hit this fair value gap, but then we get a close right here. Hold on. Boom. This is where my model comes in. And I would have entered on the close of that candle of the fair value gap. So you would enter right here. You probably had a stop loss back above it. But to be on the safe side, you could just put it above this swing high. Close right here. Target sell side right here. Boom. And yeah, this really the model. Like I say, came back up the premium, swept sell side. Swept buy side. Pretty good momentum. It took 1, 2, 3 candles again, and we do have good targets. This sell side below right here, and like I say, you could leave a runner after we hit this, because as you see, like, we just kept shooting down, and yeah, that's pretty much the model. Delivery from the fair value gap, which is right here. We're coming out of a fair value gap. Let me delete this one. So you got your delivery from the fair value gap right here. Took by side, good momentum, good targets. And yeah, you just execute, do your risk management properly. And yeah, man, that's pretty much it. And I want to say, I know y'all probably wondering why this one failed. This inversion gap right here. And the reason I say is because you don't want to take another one after you just had how many points is this? You don't want to take another inversion after we just dumped almost 300 points. So if y'all were wondering why this one fell, it's because you dumped like 300 points. You kind of want to wait for more structure to form before you just hop into another trade. But yeah, y'all, I hope y'all enjoyed this video. Leave in the comment section if I left out anything, and I appreciate y'all for tapping in. I'm out.